Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Israel's largest labor group is set to strike nationwide today to force the government into a ceasefire in Gaza and secure the release of hostages held by Hamas. Asian stocks slide as China's economy remains a drag. The official factory gauge contracts for a fourth straight month, leaving this year's growth target in jeopardy. Plus, we discuss stock valuations in the Middle East in comparison with international companies, including the opacity of regional markets, with our guest Mohammed Ali Yasin from the Oracle Financial Consultancy and Investments. Well, it's just gone 8 a.m. across the Emirates. I'm Joanna Versace in Dubai. Happy Monday, everybody. Just a reminder, it is a bank holiday in the U.S. today, Labor Day. So we're going to get thinner liquidity and thinner trading activity than usual. But we do have yet another major week coming up for U.S. data, with everything culminating on Friday, non-farm payrolls report, another key indicator for the Fed as far as getting their health check on the U.S. economy. And on that note, Friday's numbers, those PCE numbers that we were widely anticipating, came pretty much in line with expectations. On a year-on-year basis, the core number is slightly lower. And by the end of the day, we had stronger consumer spending figures. That propelled the S&P a lot higher. We closed about 1% higher for both the S&P and the NASDAQ. S&P very close to all-time highs. Today, with thinner liquidity and heading in to that Labor Day, we have the futures tilting towards the red, down about 0.1%. NASDAQ also seen about 0.2% weaker. The handover from Asia overnight also quite weak as well. The MSCI Asia Pacific down 0.4%. More weak signals coming through from China. The fourth consecutive decline in a month for those factory activity levels. So again, the trend is lower, and no sign really that the data coming out of China is bottoming. We're going to talk more about that on the show. And then oil, as we've been talking about for the most of the last few days, struggling to maintain a bid despite geopolitical flare-ups, despite production cuts coming through from Libya. And as you can see in the overnight session, down about 0.8% as well. On news that OPEC Plus, or reports that OPEC Plus are actually going to continue with their plans to put back extra barrels to the market, even though at this juncture there are lots of questions about whether the demand is sufficient to compensate for the extra supply that's likely to hit the market as well. And finally, just a quick look at what is priced in from the Fed. As you can see, even more than 25 basis points is priced in per the next 5 meetings, a little more than 30 basis points. And it does tell you about how big those rate cut expectations actually are in the market right now. All right, let's turn to Asian markets. Avril Hong is in our Singapore studio. And Avril, perhaps just give us a little bit more context as to why we are seeing such a risk-off session.
Yeah, a lot of it has got to do with China. I mean, think about Friday, how we saw that green for stocks. It didn't last very long, and we're seeing it off by well over 1% on the mainland as well as the Hong Kong benchmark. After data over the weekend on the official manufacturing PMI showed a fourth straight contraction. And this is problematic because China, as you know, has been kind of leaning on exports and manufacturing to keep that around 5% growth target in its sights. We're also seeing slight declines on the Japanese benchmark. And this is despite data that showed corporate profit growth that was better than expected, maybe a bit of a double-edged sword because of what this might mean for BOJ potential rate hikes, a bit of firming in the yen against the greenback, sitting well below the 146 level. Jumana.
Avril, thank you so much for the overview. That was Avril Hong in Singapore. Now, switching over to the region, Israel's largest labor group has declared a nationwide strike. It is the strongest push yet to force Prime Minister Benjamin Netanyahu's government into a ceasefire deal in Gaza. Now, in some of the largest protests since the war with Hamas began, hundreds of thousands of Israelis rallied on Sunday. That is after Israel said troops discovered the bodies of 6 hostages on Saturday in a tunnel in the Gaza Strip. So for more on this, Bloomberg's Dan Williams joins us from Jerusalem. Good morning to you, Dan. Perhaps give us a little bit more context on these demonstrations. There have been various rounds of demonstrations since the war began over the last 10 months, but it feels as though sentiment and public anger is a different level with the ones that we saw yesterday.
I think you're exactly right, and this could be attributed to a perfect storm of public fatigue and shock that's really crested over the weekend with the discovery of the bodies of 6 hostages, which Israel says were executed by their Hamas captors in the Gaza Strip shortly before they could be reached or rescued by Israeli forces. Now, such incidents have happened before during this war. The Israelis are familiar with this sort of tragedy, and they've certainly weathered to a war which has had pretty much wall-to-wall public support. The reason this time the protests appear to be cresting, and this may actually be a tipping point in the war in terms of domestic support for the government and its conduct, is the fact that it now emerges that when the hostages were killed, according to a forensic examination, was pretty much exactly when Netanyahu's security cabinet, a small decision-making forum, was meeting late on Thursday night and voted to approve his decision to not give way on certain key concessions that Hamas has demanded on its side of the truce talks. So many of the public are angry at Netanyahu, wondering if indeed these hostages might have been saved had that decision not gone through on Thursday night.
Yeah, Dan and you and I have had many discussions over the course of the last few weeks about those ceasefire negotiations. And one of the latest principles that Netanyahu has been sticking to is that he would like to maintain a presence along that Philadelphia corridor. How likely is it after this latest rise up of public anger, the demonstrations, that he actually compromises on that front? Is there any suggestion that there may be room for compromise now?
There isn't. Netanyahu is an ideologue, and the past has taught us that, especially under public pressure, he would not back down on something like this. He has described, indeed, most Israelis consider this war an existential war, not just against Hamas, but other Iranian-backed groups in the region that are sworn to Israel's destruction. Now, the Philadelphia corridor, as you know, as our viewers may know, is a strategic area that controls the southern Gaza Strip border with Egypt. Israel says it must retain control of this in order to prevent a rearming and a potential regrouping of Hamas under any truce. Hamas, with backing from Egypt, has said Israel must vacate this corridor. So it would appear that this is one dispute that is holding up those truce talks. But again, there's a deeper dispute here, which is that Hamas wants a truce essentially to lead to an end of the war, a unilateral end of the war by Israel against it, a survival of Hamas in power potentially, and potentially returning to its original military strength. Israel has said from the outset of this war launched by Hamas that it will not stop until Hamas is dismantled, disarmed, and Gaza no longer poses a threat. So Israel, the government, Netanyahu, and it's worth remembering that this resolution was backed by pretty much all members of his security cabinet, with the exception of the Israeli defense minister. They say that this area must be kept, while some members of the Israeli military and the Israeli defense minister have argued that Israel can afford to back off from the Philadelphia corridor, at least temporarily, if that means regaining some hostages alive. I would just add that under the proposed truce deal, there would be a first batch of hostages released in the so-called humanitarian category. Those include women, children, and the sick and the elderly. And sadly, 3 or 4 of the 6 hostages who were found dead over the weekend would probably have qualified, so they would probably have gone free in the first stage of such a truce deal, were such a deal to have been achieved in time.
Yeah, well, indeed, the clock is ticking. Where does the pressure point come from as far as the Prime Minister is concerned? Because if he, as you say, seems to be resistant to calls from the public, as you also mentioned, his security cabinet seemed to be on board with most of his thinking, with the exception of the defense minister. Where is the pressure going to come from? Is it the U.S.? Is it only the U.S. that can prompt Netanyahu to get this deal across the line?
I'm not sure that's at all true. The United States, in fact, there's generally been bipartisan support for Israel historically in the United States. The Biden administration has been publicly supportive. There have been behind-the-scenes disputes on which Israel has usually stood firm. It's worth remembering there is now a U.S. election underway, and it's unlikely other candidate would want to rock the boat by making statements that would be seen as breaking rank significantly with a significant ally in the Middle East. So I don't think U.S. pressure is specifically relevant right now. Netanyahu worries about the economy. He also worries about the strength of his coalition. However, unfortunately for those who would like to see him change course on Gaza or even to see him toppled, his coalition relies on far-right members of the political spectrum that, if anything, would want tougher action in Gaza and fewer concessions toward Hamas in any truce talks. So he would appear to be internally stable. Why today's strike threatens him, and it's worth remembering that his government is seeking an injunction against the Labour Federation to prevent this strike. It argues that really this is an illegal move by a Labour Federation whose job is to look out for workers' rights and not to meddle in wartime policy. If the strike goes through, and it's not yet clear to what extent the scale will be and how damaging it might be to the economy, that is something that could be destabilizing for Netanyahu. He's a free market economist. He prides himself on keeping the economy going in difficult times. So we will see during the course of the day.
Yeah. Bloomberg's Dan Williams, always good to talk to you. That was Dan Williams in Jerusalem. Thank you. Now for a look at some of the other stories we're following. German Chancellor Olaf Scholz's ruling coalition has suffered significant losses in regional elections. Parties on the extreme right and left took more than 60% of the vote in 2 states in eastern Germany. Media projections put the Alternative for Germany, the AfD, on course for the first win for a far-right party in a German state ballot since World War II. But it is highly unlikely to be able to form a government. French President Emmanuel Macron is set to hold talks with senior political figures as he prepares to name a new prime minister. He'll meet on Monday with former socialist Bernard Cazeneuve and also plans discussions with conservative Xavier Bertrand. Now, Macron may announce a decision in the next few days. France has been under a caretaker government since indecisive parliamentary elections in July. And still ahead, we'll get the market outlook with Standard Chartered Bank, with the Fed's rate path and China's economy in focus. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Now, China's remaining growth engines are showing signs of sputtering, while the property market remains a drag on the economy. Economists say the government must do more to hit the nation's growth target this year. Our China correspondent Min Lo joins us for more. Well, this is the 4th month in a row that we're seeing declines in these factory activity levels. What do these August PMI numbers tell us about the state of the Chinese economy?
Yeah, we're seeing actually a little bit of divergence between that private gauge, the Caixin PMI that came out today, surprised to the upside at 50.4. And Bloomberg Economics thinks that that is a little bit head-scratching, a little bit of a noise there perhaps. But if you break down that number just a little bit, you see that new orders have risen in August after falling in July. But new export orders, though, that has declined for the first time in, I think, 7 or 8 months. And that really is consistent with the broader weakness we're seeing in other high-frequency data. If you look at the official PMI data that is on your screen, the manufacturing PMI has missed expectation, the 4th consecutive month here. And if you look at the sub-indices there, output declining, new orders as well at 48.9, which suggests the headwinds here, especially with the U.S. economy slowing down. And the government has blamed the weak economic data on bad weather, saying that the heavy rainfall, the hot temperatures are to blame, but Bloomberg Economics believes that there are other more troubling factors at play, including the slowdown in government spending as well because of the heavy local government debt and the difficulty in local governments in meeting the projected budget spending this year.
And Min, on Friday, Bloomberg News reported that the Chinese government may be considering allowing some homeowners to refinance. And here we're talking about trillions of dollars worth of potential mortgages that could be refinanced. Is that going to be enough to boost the housing sector? What more can be done?
Yeah, look, well, we had the preliminary data for sales number in August that came in. It was down 27%, quite a big decline, bigger than what we saw in July, which was close to 20%. So we're still seeing declines in the housing sector despite the measures that has been rolled out recently, including we're seeing at least 10 cities scrapping or relaxing some of those new home price guidance, which has led to developers slashing prices prices aggressively to attract home buyers. But I guess understandably, some home buyers are now sitting on the sidelines waiting for the prices to bottom out, which could explain why we're seeing further declines in sales numbers so far. So the refinancing plan, yes, it will be positive for the sector, but it's really equivalent to a sort of mortgage rate cut, which the PBOC has done in the second half of last year as well. And that wasn't really enough to move the needle when it comes to the housing sector. So our Bloomberg economics team believe that perhaps the government is really running out of policy options to rescue the housing sector so far.
Excellent. Thank you for the overview. Our China correspondent, Min Lao. To pick up the conversation is Eric Robertsen, Standard Chartered Bank Managing Director, Global Head of Research and Chief Strategist. Good to have you with us. Let's just start with China and the numbers that came through overnight, because if you look at the trend of the last few months, not only is it reflecting a weak economy, but it also seems to be reflecting an economy that continues to weaken. We're not at the bottom yet. What ramifications does this have, not just on China, but the rest of the world?
No, it's a good question. You're absolutely right. We have seen a continued and I would describe a broad-based deterioration. The PMIs, I think, highlight some of this. It's very consistent with our own proprietary data on small and medium-sized enterprises. What we've talked a lot about over the last few months is that China has a demand problem. It's not a supply-side problem, right? It's a lack of consumer demand. It's a lack of private sector demand outside of state-owned enterprises. And what that says to me is that stimulus measures need to solve a couple of problems. Soft labor, weak incomes, a deterioration in household balance sheets. These are the issues that I think need structural attention in China's economy before we can stabilize. And so I think if they're going to reach their growth target for the year, you have to assume that there will be a pickup in both fiscal and monetary stimulus in the second half.
Yeah, assuming that they do go all out on that. But in the absence of, let's say, a broad-based stimulus as opposed to targeted measures, what happens to the yuan? And again, here, the theme of the last month has been dollar weakness, and yuan has benefited from that, but less so than other currencies, say, the yen just around the corner.
That last point, I think, is really critical. We have seen some appreciation of RMB. I think it's more dollar weakness than it is RMB strength. And, you highlight correctly that it has lagged the performance of other currencies in Asia. Our view is that that will continue. In an environment of dollar weakness, which we expect for 2025 based on Fed rate cuts, I would expect RMB to stabilize between the 700 and 715 range, right? And that stability, I think, is an important first step. But as we've been talking about, if the economy continues to underperform, then you have to believe that the currency will also underperform its peers and competitors in the region.
Fair. So let's unpack your dollar view then. There's a lot priced in to this rates curve here. 100 basis points by the end of this year, I think 200 by the end of next year. It feels as though, once again, the market seems to be getting ahead of itself. If the Fed don't end up delivering this many rate cuts, shouldn't that be dollar positive?
I think it's a little bit more nuanced than that, right? So, I mean, you point out, and I think this is correct, that there is an enormous amount built in terms of rate cut expectations. We think the Fed goes 25 per meeting for the next 3 meetings. The market is a little bit more excited than that.
Yeah.
But what I think will happen is, if our forecast proves to be correct and the Fed is a little bit more cautious to start, I think the market will just push out those rate cuts into 2025. And as long as that happens, I wouldn't expect the dollar to stage a significant rebound. We may consolidate the recent losses. It may be a period of very choppy tactical trading until the U.S. election. But then if the Fed really starts to get more aggressive with rate cuts next year, that should push the dollar down.
Well, we've got big data coming up this Friday. Arguably, nowadays, the labor data is a lot more influential for the Fed's calculus than the PCE data, the inflation data. They seem pretty comfortable with the view that inflation is heading back to 2%. Let's say we do get a weak number, NFP, on Friday. Does that mean that the Fed may actually end up going for 50 basis points come September? And do you think they should, given the signaling that that's going to give to the market about how weak the U.S. economy is in their eyes?
So I do think that if we get a very weak labor market report, I mean, something close to zero payroll growth, that raises the probability of a 50. I still don't think they need to do that. The broad trajectory of the economy is softening, but not so much that we need to be panicking. And we have to think about what the Fed wants to achieve. They want to communicate that they've started the process of monetary easing. They could continue that more aggressively, less aggressively, depending on how the economy evolves. So they could do 25 and give a very dovish message. And I think that would actually be more beneficial than a 50 to start.
Okay, let's go back to your original premise, which is that we're going to see further depreciation of the USD in 2025. What are you buying against it?
This is always the difficult question,
Yes.
right? I mean, people can say I'm bearish the dollar, but what do you buy against it? I think there's a handful of stories that are really compelling to us. Number one is Asia. Asia ex-China has some really interesting growth stories. There's India, there's Indonesia, there's Malaysia. There are a handful of economies and currencies that have been completely neglected for the last couple of years. Now, part of that was the market focus on LATAM and the high yield that was available there. But in a world of perhaps more volatility, interest rates starting to come down, those stories in Asia start to look a lot more compelling to us. And I think that's where we're going to focus in 2025.
Okay, excellent. Eric, thank you so much for joining us today. Eric Robertsen, Standard Chartered Bank Managing Director, Global Head of Research, and Chief Strategist. Thank you. Well, also coming up, the World Health Organization believes mpox outbreaks in Central Africa could end in 6 months, but vaccines remain unavailable as cases surge. We're live in Johannesburg next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Dubai. The World Health Organization says it is aiming to contain mpox outbreaks in Central Africa within 6 months. More than 18,000 cases have been confirmed, mostly in the Democratic Republic of Congo. UNICEF has now issued an emergency tender for the procurement of vaccines for the hardest-hit countries. Our Chief Africa correspondent, Jennifer Zabajaja, joins me now from Johannesburg. Jen, how do authorities plan to address this in the time frame that they've noted?
Right. Jumana, we did hear over the weekend from WHO Director Tedros, and he was talking about this time frame that you were just noting there, about 6 months, which I think is welcome news for many people who have been following this. But he says that the plan is to work closely with governments and also with partners, namely Gavi, UNICEF, and others, to expedite the distribution and also the treatment of mpox more globally. Perhaps maybe reassuringly, what we did hear from Tedros, as you're looking at part of his quote there, is that it seems as though what we see with mpox, it is a little less lethal. And so potentially there is an opportunity then to track down and cut down on this spreading any further.
Chief Africa correspondent Jennifer Zabajaja in Johannesburg, thank you very much. Stay with us. We've got more in a few moments. Welcome back. This is Horizons Middle East and Africa. Our top stories this morning. Israel's largest labor group is set to strike nationwide today to force the government into a ceasefire in Gaza and secure the release of hostages held by Hamas. Asian stocks slide as China's economy remains a drag. The official factory gauge contracts for a fourth straight month, leaving this year's growth target in jeopardy. Plus, we discuss stock valuations in the Middle East in comparison with international companies, including the opacity of regional markets, with our guest, Mohammed Ali Yasin from the Oracle Financial Consultancy and Investments. Well, it's just gone 8:30 a.m. across the Emirates. I'm Jumana Bersechi in Dubai. Let's get a check on markets for you. It is a bank holiday in the U.S. today, Labor Day, so we're going to get thinner liquidity than usual. But we did see another positive close for Wall Street on Friday, with both the S&P and NASDAQ ending up more than 1%. That PCE figure that we had been anticipating coming in line with expectations, perhaps a smidge lower actually on that core number on a year-on-year basis. Consumer spending data also coming in quite strong, which propelled Wall Street to a more positive close by the end of the day. Today, futures tracking slightly weaker, as you can see, down about 0.2% respectively for S&P and NASDAQ. The handover from Asian equities overnight also pretty negative as well, with the MSCI Asia Pacific down 0.4%, weakness coming through from China. So we'll talk more about that in a second with Averill. And then finally, Brent, keeping a close eye on the energy complex here. Again, really struggling to maintain a bid at these levels on concerns about the outlook, the demand, some of the signals coming through from China, in addition to prospects of OPEC Plus putting further barrels back to the market in coming weeks. So let's talk more about this risk-off session and what we're witnessing in Asia. Averill Hung is in our Singapore studio standing by. Averill.
Yeah, Jumana, as you highlighted there, those growth headwinds to China, I think, are what are dragging the sentiment down on the mainland and in Hong Kong, as well as the data showed us that manufacturing as well as housing slump is just deepening. The other thing I wanted to highlight is what we're seeing in Japan, because today the pharmaceutical stocks are the ones that are dragging the Nikkei. We also saw a bit of a firming on the yen, but earlier this hour, according to sources familiar with the matter, we got the Bloomberg scoop that apparently these Chinese authorities have been threatening to kind of retaliate in the event that potentially we see Japan ramping up chip curbs. And of course, this is something that Japan has been doing in line with the wants of the U.S. So we're seeing the likes of LaserTech as well as Tokyo Electron declining against that backdrop. A bit of a bright spot in the South Korean Kospi from the EV battery stocks after a number of them got upgrades from Morgan Stanley. Jumana.
Averill, thank you so much for the update from Singapore. Well, an AI frenzy has propelled NVIDIA into the world's second most valuable company. Its stock has more than doubled this year, following a gain of 239% in 2023. But while NVIDIA may look pricey to some, its valuation pales compared to some Middle Eastern firms. So joining me now is Bloomberg's Farah Al-Bahrawi, who leads our coverage of EMEA equity markets, macro trends, and strategy. Farah, good to have you with us. So tell us more about some of the valuation we're seeing in some of these specific Middle Eastern companies and how it stacks up versus global peers.
Absolutely, Jumana. So a company like NVIDIA, we see selling off every now and then on concerns that it's on high valuations. But you look here at the Middle East, stock like Aqua Power is trading at 134 times forward earnings, which is pretty staggering. Analysts are saying that any possible opportunities in the future for Aqua Power is very much priced in. The stock is up about 8 times since its debut in 2021. So that's one company that's trading even higher than its European peers. So again, an example of how valuations can run pretty far in the Middle East. Another look here in the UAE, you have IHC. If you want to compare it to another holding company, Warren Buffett's Berkshire Hathaway, again, the price-to-book ratio is much higher for IHC. This is not just, one example, but many of them across the region. And why that starts to become relevant for international investors is a lot of these companies are included in global benchmarks. Investors have to be exposed to them via passive investing. So the question here is not just why valuations are so high, but what are the analysts saying? The problem is there's a lack of analyst research in the region, as we've seen with BlackRock and Bernstein now coming to the region and trying to bolster that.
We'll talk more about that with our next guest. But let me just ask you about IPO activity. We've had a couple of months of quiet because it's a Middle East summer, but things are picking up again. Yesterday, I saw Arabian Mills came with their IPO in Saudi Arabia, and within the first hour of books opening was already fully covered. So it does tell you that demand is coming back, perhaps?
Demand is coming back. We've also seen Al Majid for Aoud. It's a perfumer. Also there, they've got demand immediately, hours after the book opened. And we have also heard of a few IPOs coming in from the UAE. We have NMDC looking to list its energy unit. The books are open, going to close on September 4th. That's an $877 million IPO, the largest so far in the UAE this year. Another one we're watching out for is Talabat, a household name for those of us here in the region. A food delivery service owned by Delivery Hero in Germany, looking to list in the fourth quarter. In terms of valuation, it's not clear yet, but RBC Capital Markets are saying that Delivery Hero's Middle Eastern unit is valued at around 5 billion euros. So one to watch out for.
Oh, yeah, no, definitely. And definitely close to home for many of us. Bloomberg's Farah Al-Bahawi, thank you so much. Let's bring in Mohammed Ali Yasin, CEO and founder of the Oracle Financial Consultancy and Investments. Good to have you with us on the show.
Thank you for having me.
Let me just start off by asking you what you see as the outlook for regional equities going into the latter half of the year, or end of the year, last quarter.
Well, based on August, it has been a good month, and I think it looks like a good year end. What affects our markets here is not the fundamentals, it's the geopolitics, in my belief.
Yeah.
As the tensions go up and down, that's where we see some of the volatility come in. The demand on the IPOs have been good. The last two IPOs, I would, a caveat, the Spinneys and Aleph, they did not do very well once listed. They did not pop up as previously. So the National Marine Dredging Energy Company is important to view in terms of how it will perform once it's listed. A pop-up will tell you that there is the appetite and the risk appetite is there for the local investors. But it also has to be seen with a pinch of salt, because the retail investor portion is only 2% in this IPO.
Right.
85% is for professionals, which tells us, in a way, the company or whoever the advisors, the investment advisor on it, they have a list of pre-approved kind of people to subscribe to, and it looks like it's going to be very well subscribed.
Yeah, the big hype for the better part of this year, last year, obviously has been into tech, Magnificent Seven in the US, AI, all of those big themes.
Sure.
Is there a way to play into the global tech theme via regional equities as well?
In our region, they are trying to, but I don't. We've seen things like new data centers like Bayanat and Bayanat merging with Yasat soon, which is delayed. There's some other like Presight and some of those others. They're trying to come in. We don't manufacture chips in this part of the world. Yeah. AI as a technology is being implemented here in many areas, and there's a university here in UAE for AI. So they see the importance, but I didn't see it still translate into a stock market where it's a public markets at the moment. The thing is here, a lot of the investors, they like the assurance of a government as a majority shareholder and then sells them some. So they know that the longer term future and commitments by the company will be honored, where if it is private only, it would be a bit more difficult.
Yeah. One of the features that we were just talking about with Farah now is the limited analyst coverage there is for many of the stocks in the region. Do you see that changing anytime soon? And how necessary is it to have more analyst coverage in order to entice more international buyers?
It has changed, Jumana. I mean, for someone who's been here for ages in the stock markets, I've seen it come from learning about the news by insiders and then going out like a month after that, and now to seeing it online happening at the same time. Yeah. The question is, do those companies want to be covered by those internationals? For example, the example she gave of IHC, for example. Yeah. Sometimes some of those companies, they don't see the value. They're closely held by the certain party, big party, and that big party is happy where it is. It looks at it as a holding company. It spins off some of its underlying companies. So you see the coverage on the underlyings, but you don't see it on that mothers. Yes, you will miss some of that upside. But at the same time, I think the market will force those companies to open up once the liquidity dries up and they need some of that foreign money coming into it.
But are these valuations actually realistic? Again, going back to the example of Aqua, it's pricier than NVIDIA, and NVIDIA is the most valuable company in the world.
Yeah, but many of those, NVIDIA is like 2.9 trillion, I think, market cap. It's bigger than the Saudi market altogether, which includes Aramco and Aqua and others. I think there is a retail investor portion there that is dictating some of those prices, but it's possible because it's closely held. You'll find like 80-90% of those companies are held by governments. So the true market mechanism is not really dictating it. Will they sell? They would like to sell. We saw Aramco come and sell like 12 billion. But can markets take that kind of size also at the moment? The question today, the balance, should I go and sell more shares of one of those bigger companies or should I bring maybe 5 more companies into the market to increase the depth of the market?
Right.
And my answer is to do the latter. Because I think today markets need still more depth, and more of those companies in new sectors would be very positive for the market. And that's why I think some of the things that Farah has talked about, there's also Lulu hypermarket, there's about 4 to 5, I think, IPOs that are planned between now and year end in the UAE at least, provided that we see the kind of positive momentum continuing with everyone that comes to the market.
I was going to ask you about how you see the pipeline into the last few months of the year. Do you anticipate a pickup versus where we were, obviously versus the summer, but say versus prior years?
Prior years may be a bit difficult, but for this year we still have some good ones to come. There is liquidity, there is appetite. Banks are interested in leveraging, giving leverage people to subscribe, although that will not work in the favor of the investor, but they are willing to do that. And I think markets have done okay considering all the kind of pressures that we have around us. They've done okay so far.
Yeah.
Fundamentals, as you said, there are still companies trading at 7 and 8 PEs and giving you a 5% yield, and even in this market, while we talk about things like 50 and 60 and 100 and other. So be picky, and you can find a good portfolio of 10 to 15 stocks between those markets, giving you low risk in terms of PE and high dividend yields.
Yeah, final quick one for you, because you mentioned it at the top. Geopolitical concerns, have they had an impact on valuations for regional indices?
More than sentiment and valuation, I think.
Yeah.
And it will continue going forward, but I think that as long as the fundamentals are there, the growth of revenues is there, investors will overcome some of those kind of volatilities and going forward.
Yeah, very clear. Really good to chat to you.
My pleasure.
Mohammed Ali Yasin, CEO and founder of the Oracle Financial Consultancy and Investments. Thank you very much. So for more of these stories looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com, just shown on the screen in front of you there. And coming up, coffee bean exports, important at this time of the day. Coffee bean exports are flooding European ports as a new deforestation law fast approaches. We have all the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Coffee cargoes are flooding the European Union as traders rush to stock up on beans ahead of new rules that kick in at the end of the year. The EU's Deforestation Regulation will require importers into the bloc to prove commodities like coffee don't contribute to destroying forest land. However, a lack of clarity on the details has left traders poorly prepared. Bloomberg's Andiro Ganga joins me now from Kigali. Andiro, well, I always want to talk about coffee, but first of all, just tell us about this regulation and how farmers are responding in a bid to beat this potential new deadline.
Good morning, Jumana. Well, the key word here is compliance, but coffee relies on millions of smallholder farmers scattered across the country, particularly in rural areas. Hence, mapping and tracing is going to be a challenge. And that's why we're seeing this surge in exports in a bid to be the 30th of December deadline. And this surge is not just unique to Africa. If you look at a country like Brazil, their exports of coffee beans have surged by 65% in the last 7 months, leading to July compared to last year. If we zoom in on Uganda, their exports of Robusta have surged to an all-time high. That's how much exports are heating the market. Roasters are actually open to it because they're trying to buffer themselves from any shortage that might hit the market come the first quarter of 2025 when these regulations come into effect. And farmers also recognize this window of opportunity. Their next crop comes in October. And if you factor in transit and processing time, these crops will not be able to beat that deadline. Hence, they're trying to utilize this window of opportunity.
Well, we're keeping a close eye on the prices of commodities, and I'm just looking at some of these coffee bean futures back to levels not seen since 2011. What are the implications of the regulation taking effect?
Jumana, there are several implications that lie ahead. The dilemma for Uganda is, will they be ready? Coffee brokers are telling Bloomberg that Uganda is really lagging behind when it comes to compliance, and so many exporters did not have some of these sustainability programs in place. There's also uncertainty looming over the implementation of these new regulations. Now, when we come to the impact, first of all, due to the higher prices, and also traders and exporters have to grapple with high cost of borrowing, and then you factor in things like shortage of container shipments and also transit time. The price of coffee beans is likely to keep going high, and this will in turn affect the price of a cup of coffee.
Yeah, it certainly does appear to be the case. Andiro, keeping a close eye on the price of coffee beans and our daily coffee. Andiro Ganga in Kigali. Thank you. Now for a look at some of the other stories we're following. Indonesia is aiming to sign around $3.5 billion in deals with African nations during a meeting underway in Bali. The Vice Foreign Affairs Minister told Bloomberg that agreements on gas, healthcare and agriculture are expected at the Indonesia-Africa Forum. Resource-rich Africa is seen as a key player in Indonesia's ambitions to use its vast reserves of nickel to become a production hub for batteries. Chinese automakers registered fewer electric cars across Europe in July. That's as new tariffs amplified the impact of a broader slump in EV sales. Researcher DataForce says brands including BYD and SAIC Motor accounted for nearly 10% of EV registrations, down slightly compared to a year earlier. New tariffs introduced in July raised duties on Chinese-made EVs to as high as 48%. And Intel may reportedly consider selling its programmable chip unit, Altera, as part of a cost-cutting plan. Reuters cites a source saying the company is also considering capital spending cuts, confirming a Friday report by Bloomberg News. Our sources say other possibilities, including a split of Intel's design and manufacturing businesses, with options to be presented to a board meeting later this month. And Oasis fans rushing for tickets to the British band's first concerts in more than a decade overwhelmed the sites of Ticketmaster and other sellers. Fans complained of long lines and errors, with many walking away empty-handed after hours of waiting. The 17-night UK and Ireland tour is the first since the band broke up in 2009 after years of infighting between the Gallagher brothers. Can I say it? Don't look back in anger. All right. Coming up, Saudi Arabia is on a mission to become the Middle East's prime investment hub as slashing red tape to attract foreign cash heats up. We're live in Riyadh next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Dubai. Saudi Arabia is overhauling its investment laws in the latest effort to draw in more foreign funding and compete heavily with the likes of Gulf neighbors, including Dubai and Abu Dhabi. The kingdom says the reforms are intended to cut down on bureaucracy and simplify things for investors. Our Saudi Arabia Bureau Chief, Christine Burke, joins me right now. Christine, let's talk about these updated laws. What are some of the key changes that are being introduced, and how is it likely to make transacting easier?
Good morning, Jumana. So first, let me just say that we spent the last couple of weeks talking to lawyers, to investors, and to the Ministry of Investment in particular to try and really dig down into what this investment overhaul will actually mean in reality for investors. And it boils down to a couple of key things. The first is that this does away with the need for foreign investment licenses. The Ministry of Investment says we will now have a new one-time simplified registration process that will eliminate the need for investors to kind of run around and obtain multiple licenses and pre-approvals for different things within the same business. Ultimately, it hopes that that will significantly reduce paperwork and also cut down on what it called, quote, bureaucratic hurdles. Other notable reforms that are coming through based on conversations that we've had is that this new investment law will offer equal rights to foreign and domestic investors. It will also offer investors the freedom to manage their investments and to repatriate funds. And crucially, what lawyers have told us is that it gives investors more flexibility in terms of how they handle disputes. Now, based on all these discussions that we had, it does seem that this new investment law should make make things easier in terms of investing in the kingdom and kind of cut through some of the government red tape that currently exists. But what lawyers have told us is that what we now need to see are the implementing rules. Basically, how is Saudi Arabia going to actually apply these rules in practice? The Ministry of Investment said that those guidelines around the implementation regulations will come by later this month, and the investment law itself will then take effect in 2025.
Yeah, I'm just reading the article that you published, Chrissy, on our terminal. A very good read, but also one of the big questions here is what these laws or revised laws mean for their ability to attract FDI. Clearly, that has been a big focus for the government there. In what way does this help bring in extra FDI?
Well, look, I mean, it's no secret that the kingdom is undertaking the massive economic overhaul known as Vision 2030, right? And this is creating a massive spending burden on the government. The kingdom is facing at least 3 more years of deficits in the national budget. And also, we have reported that mega projects are coming under funding constraints. That includes NEOM. And so we are seeing a potential shift in timelines for mega projects. So definitely what the Ministry of Investment is trying to do here is simplify processes so that foreign investment can more easily flow into the kingdom and help support some of those Vision 2030 initiatives. Saudi Arabia aims to draw in $100 billion in FDI a year by 2030. Last year, it brought in just $19 billion. So it has a bit of a way to go to realize its ambitions, but it's clear that it does need the foreign capital. Investors we spoke to for this story told us that part of the challenge in drawing FDI up until this point in time has probably been down to the fact that it remains challenging to invest here. So if these laws actually follow through and deliver and do make things easier, then perhaps it will move the needle a little bit on foreign direct investment.
Yeah, definitely a big priority for the government. Chrissy Burke in Riyadh, thank you so much for that overview. All right, before we head out, a quick look at equity futures. U.S. is closed for Labor Day. Most of these futures are pointing to a negative close after a weak handover from Asia, however. That was it for our show, Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.